All right, for all you guys that trade the Emini futures out there, I'm going to show you something awesome today, okay? I'm going to show you in this video how to trade through a bunch of chop and patiently wait for a beautiful trend-based move to capture something like 40 or 50 points on the E-minis today. All right, so let's do this. All right, what's up, guys? It's Mark here at Dino Trading. Let's get right into it, man. This is a really special video I wanted to do for you guys, and it was almost a perfect use case today. All right, so for all of you guys that have ever been wondering how to stay out of a chop market, right? How do you stay out of this chop and only pay attention to a trend? All right, well, this is the video that you need to watch, okay? Because for all you guys out there who are brand new to the channel, or you're still trading off of garbage candlesticks and indicators and all that nonsense, I can almost guarantee you that by the time you're done watching this video, you are going to realize what many professional traders have realized and figured out, okay? And that is that price action and trend lines work. They're going to keep you honest in your trading. They're going to help you figure out the direction of a trend, a huge trend-based move. And, as I'm about to show you right now, price action will also keep you out of chop. All right? What do I mean by that? Well, let me show you. The first thing we need to do is we need to get to a side-by-side view just like this. All right? A side-by-side view, especially for those of you guys that have been following my channel for a long time, you know that this is going to be mission critical to your success. All right? You got to have a higher time frame dyno bar chart on the left. This is going to tell you with a shockingly accurate degree of precision what is the overwhelming trend direction, and you're going to need a smaller, what I call micro chart on the right. I call this my T-bar chart. And this T-bar chart is going to help you drill down on a microscopic level and look for low risk, high reward type of setups. All right. So again, for those of you that have been following my channel for a long time, this is nothing new. You've seen this before. And for those of you that are brand new to trend trading and price action techniques, I really want you to pay attention to this, okay? Because I'm about to show you something that's going to transform your trading literally on day one. Okay, so let's get into it. All right, so as you guys know from the dyno bars charts, the first green after any red, that's your long signal. The first red after any green, that's your short signal. So what I've done is I've taken these three signals that printed themselves in the morning session. Okay, you know that I'm a huge fan of just the morning session. You do not need to trade for 8 hours, 9 hours, 10 hours a day. I mean, I guess you can if you want to, but I don't. I like to do other stuff with my life after lunchtime. You know, I'm a big believer in just trade the morning session for a few hours, make your money, do something else with your life after that, okay? And come back and do it again the next day. So check this out. See what I've done here. I have populated these three signals, okay, from our dyno charts, okay, and I've popped them into the T-bar chart, which you can see here. In fact, what I'll do is I'll highlight those three signals from the dyno charts into the T-bar charts. Okay, so again, nothing complicated about this, guys. Don't freak out. These arrows here, right? This green arrow, this red arrow, and this green arrow again, all that represents is the information from the chart on the left. Makes sense? Now check this out. Here's the good stuff, all right? Here's the meat and potatoes of what I'm about to show you on how to stay out of a chop market and how to capture only a trend-based type of move, okay? So watch this. So here's signal number one. Would you agree, right? This is the long signal from over here. This was the first signal of the morning session, about 8:45 or so. That's Chicago time, okay? I think everybody would agree with that. So from 8:45 and on, we're looking for bullish opportunities, okay? And how do we do that? We want to draw trend lines in this fashion, and we want to connect downward sloping trend lines. Now check this out, all right? So yes, we do get one falling dot and a second falling dot, right? Yes, we do make an attempt to draw this trend line. But, you guys know what I'm going to say next, right? Check out the signal we got right here. We now got a bearish signal, right? So we're no longer looking for what? We're no longer looking for longs. You get what I'm saying? So at exactly, what is this, 852, this trend line becomes null and void because we're only looking for shorts now. You get what I'm saying? So there was actually no trade to be had, and now we're on the lookout for what? We're on the lookout for shorts, which means for short trades, we want to connect rising dots with the trend line in this fashion, okay? And so let's see, do we have any rising dots here, okay? Here's one dot, and that's all we got, right? We didn't even get any opportunities to go short. You guys see what I'm saying? Like, are you guys kind of following along here on how the T-bars and any concept of trend lines, right, can actually help you stay out of a chop market? You get what I'm saying? So signal number one, we're long. We're looking for long opportunities. We don't get it. Signal number two, okay, from over here. This is signal number two, short. This red bar here, I've drawn it in the T-bar chart. Signal number two, we're looking for shorts. We don't get it, right? So signal number one and signal number two, this bullish and bearish trade, there were no actual entries, which was a thing of beauty because it actually kept us 100% out of this chop area where a lot of those retail traders and those idiot traders who were trying to, you know, short the S&P based on who knows what, right? They got obliterated in this chop here trying to figure out what's going on, right? Now check out the best part about this, all right? This is why price action is priceless, if you ask me. Let's talk about signal number three here. Signal number three, which is signal number three over here in this chart, okay? So now what are we doing? Right? We're looking for longs. How do we do that, guys? We're looking for trend lines like this, right? We're drawing downward sloping trend lines on every single pivot point. So let me try to draw all of the pivot points for you as best as I can here, okay? So here is one trend line, right? Yes, that gets filled. This is definitely a bullish trade. You'd be taking this trade all day long, putting your stop at the most recent swing low. Makes sense? Nothing special there. That's exactly how you enter a potential trade. And what happens, right? Market comes down a little bit, you get stopped out, but you're still bullish, right? Because if you look back at the dyno charts, it's still green. And if you draw the high and the low, right, you're still in the retracement zone. So you have to train your brain to keep looking for opportunities. When you get stopped out right over here, right, you're just simply looking for the next sequence of trend lines, which, lo and behold, prints itself right over here, right? That's the next sequence of falling dots. And now if I squish this forward here, in fact, you know what, let me just maximize the T-bar chart here. Let's fit this, okay? Look at this thing, man. It took off for 35 points, straight up, okay? Entry happens right on this section here, break of the trend line. Your stop gets placed at the most recent swing low, right? One tick below that, market just takes off like a rocket ship. Makes sense? So if I go back to the side-by-side view here, man, you know, everything that you saw me do here, okay, on signal number three, all right, happened in the retracement zone, right in this section over here, right? So, you know, let me maximize the dyno bar charts, guys, and wrap up this video. What I learned today, all right, even me, someone who's been doing it for this amount of time, I learn something new every day, right? And this was a really, really important video that I wanted to share with you guys on how I personally try to stay out of a chop market and only capture trend-based moves, right? And this is the S&P E-minis. If you want to see the Dow futures, here's the Dow from today. Again, gorgeous, right? Short, long, draw the highs and lows, draw the highs and lows. You tell me, did price retrace, right? Yesterday's beautiful session, right? Same thing, man. A little bit of chop, right? Followed by a massive trend. Day before that, you know, no chop at all almost. Beautiful short signal. Draw the high, draw the low. I mean, come on, man. 500 points on the Dow. So, you know, listen, guys, there's value in understanding price action. There's value in having professional charts that are extremely helpful at forecasting the starting point of a trend before it actually starts, right? And in my opinion, there is no better software in the world, okay, that can help you stay out of a chop market while also helping you stay in a trend-based market just like this. This is how you capture huge gains. This is how you keep your losses small, guys, okay? And this is how you learn to trade like a professional trader. All right, guys, thanks for watching this video. Hope you learned something. If you have any questions, please do not hesitate to get in touch. Thanks for watching. See you on the next trade.